Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 8th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right here that the ES had a wild after hours and overnight trade. Significant selling pressure coming in after hours, dropping price to 31.81, which is the mid pivot of the pivot range here for the month. Price then turned around and rallied back up and is currently trading near the highs of the overnight and pre-market session. That left behind, or has currently left behind, a giant rejection tail here. This is a large day right there. It's 252% of average range. So if you take average range here, look at the average range coming out of December and what we started with. That's 250 times the size of those bars on average here. That's a pretty significant bar. It's kind of like having one of these days right here all in one. You know, 1, 2, 3, 4 days in one. The same thing over here, getting hit hard and returning. This could lead to another big continuation higher. We have ourselves a really clear pivot now to work off of. This 3180 pivot is very important. Obviously, I've talked about before, this midpoint's important in general. So we could theoretically drop as low as that point and still be a buying opportunity, which is what I mentioned in the pre-market video yesterday. And so right now, we're really looking to see how does price respond the rest of the day. Does it hold this geometry? Does it close lower? Say if it were to close at 3,200, it would no longer look this way. It would look like a big red candle here. So we got to see how it finishes the day. But as of right now, if price can hold, say above 32.15 the rest of the day, or 32s, over the next couple of days, that could be an entry point for a continuation higher toward 3,300 and likely beyond. Again, it's going to be one of these pullback and go type of situations here that we've seen over the last few months. If there's a failure to hold that midpoint or this pivot, that opens up a return back toward the previous month's low. Alright, let's take a look now at the NQ. Very similar price action, large, wide-ranging day. So you can see how large this day is right here. That's 221% of average range. 207.25 points of range. It's been averaging 93.7 on a 10-day basis. So 221% greater than average range over the last 10 sessions. And we are seeing a test at the monthly pivot range. Again, you trend higher like this. Let's wipe that slate clean. If you trend higher like this, pullbacks to the pivot range become a buying opportunity. It hit the very top of it here and bounced. And so again, that's also the trigger zone. That makes for a very nice continuation. How do we finish the day? You know, again, there could still be an entry over the next day or two, anywhere between the previous month's close and, you know, call it 88.90, 87.90. So anywhere in that zone could still be an entry opportunity over the next few days. As this thing continues to build out and look for a continuation higher. Now, crude oil put off a tail in the opposite direction. This one was a significant rally in after hours trading, rallied up to 65.50. 65 really is the high, and then turned around significantly and is now on lows. So it has had the opposite reaction to the broader market, basically getting a big tail at the upper end of the day's range. This is also occurring at the 64s, which is very important. If we look back in the chart a little bit here, you'll see the history of this zone. Just call 64 right there down to about 63. Recently in this chart, that's where all the selling pressure has come from, and now we're seeing the same type of price action here. So we've had a pretty big push downward. Again, we're forming a little bit of an inverted type of pattern here. Below 62, so if price were to push above 62.11, that could open up a near-term pop back up. I would say, depending on how it closes the day here, again, 63.50 to 64 could be an entry over the next day or two or three for what could be a pullback toward 57. So again, this market's been very strong. It's been exploding on mid-ish tensions, and right now we're seeing a bit of a rejection here off the highs, and that could pull back things at least to the midpoint 59, maybe to the midpoint of the broader pattern. Again, we're up here near a major area of resistance and could see further pullback if price cannot reestablish through 64. Okay, lastly, taking a look at gold futures. As you can imagine, another wide-ranging day here as well. We've gotten up to 1613 now, exploding through 1600, but seeing a large day. This one has 260% of average range right now. The range of the day is over 40 points. It's been averaging 15. That's a pretty big day right there. You're also seeing kind of a flush of prices here through those highs. As I mentioned before, it wouldn't be surprising to see some sort of blow off top followed by an impulse pullback to create a range. So that's a strong top. That's a pretty strong little low here that we pull back to the midpoint of that pattern. Let's call it 1525, 1530, and that could be ahead. So this high right there with that midpoint, that's going to be very important. That's 1590, 1595. Any pullback into that zone could still be a sell for a pullback to 1525. So right now we've had a big flow up. Perhaps we get a little bit of a reversion to the mean after the blow off top here, and that could lead to another round of strength. So right now it appears the ES and the NQ are poised for more upside here. The crude oil and gold appear to be pulling back from recent highs. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.